So you've decided to do your own bookkeeping. How exciting! You are about to turn a pile of paperwork into something useful. Information that will help you make great decisions about your business. Bookkeeping gives you a very direct understanding into the ebbs and flows of your business finances. It will help you speak the language of numbers more quickly. To help you get started, I'm going to discuss the most common bookkeeping errors I see my small business clients make. Let's dive in. Mistake number 1, not processing bookkeeping monthly. You've heard me nag before about entering your bookkeeping monthly, so I won't belabor the point again, but know that bookkeeping is the best way to make your information useful, avoid CRA audits and penalties, and benefit from tax planning. So make a plan, stick to it, and do your bookkeeping monthly for the sake of your business and your own stress levels. Mistake number 2, not sorting receipts properly. At its most fundamental, bookkeeping is sorting expenses into categories and then totaling them up. For example, it is taking a receipt for paper, recognizing this as an office expense, and sorting it accordingly. Sorting errors are one of the big bookkeeping mistakes I see when preparing tax returns for small business owners. To fix this in your own bookkeeping, follow these 3 fundamental rules. Number 1, your software program can't do this on its own. Bookkeeping programs advertise their ease of use and AI capabilities, often indicating the program can scan your receipt and then allocate it to the correct category. This sounds great, but I've rarely seen it work out in practice. Clients who rely heavily on their bookkeeping program for sorting end up with horrendously messy and inaccurate books. This increases their CRA audit risk and their accounting bill. Don't follow this same trend. Take the time to understand the capabilities and limitations of your bookkeeping software. Carefully review the recommended categories the program is proposing and understand that significant errors can pop up if you leave the bookkeeping program to its own devices. If you aren't interested in carefully maintaining your bookkeeping software, then consider bookkeeping alternatives like an Excel template. One that we have on our website is built specifically for small business owners. Number 2, recognize capital assets. Capital assets are equipment, furniture, or machinery that cost more than $500. Assets aren't considered an expense and should not be lumped in with your supply costs. Instead, they need to be put in their own category because assets cannot be directly written off in the year. Capital assets must be amortized over several years according to CRA rates and restrictions. New bookkeepers don't recognize capital assets and incorrectly lump them in with other expenses like office supplies often. To be a step ahead, watch out for this common error and separate capital assets into their own category. Number 3, don't get carried away. Conscientious clients want a category for everything, and I get it. You want to find the right answer, the perfect fit. An example is a security system renewal invoice for $15. You might be tempted to make a new expense called security expenses and slot this guy in. But realize this is a small invoice and a better choice is to include it in building repair category that already exists. Yes, it is important to find the best category for your expenses, but creating too many choices can create overwhelm and duplication. This makes it harder to read your financial statements and more difficult to complete your tax return because no matter how many categories you create, the CRA only has a standard set of allowable classifications. Sometimes you won't be able to find the perfect fit. Instead, picking the next best option is the correct choice. If an expense is important for decision making and will be helpful to separate into a different category, then go ahead, make a new account. But if you are struggling with perfection or realize the next best alternative might be the right pick. Okay, those are my 3 tips on sorting. Let's jump back to the last 2 bookkeeping mistakes you are going to want to avoid. Mistake number 3, not doing reconciliations. What the heck is a reconciliation? Is usually the first question new bookkeepers ask. A reconciliation is comparing the expenses you've entered into your bookkeeping program to a bank or credit card statement and looking for differences. You may find expenses on a bank statement, like bank fees, that need to be included, or duplicate expenses that need to be removed. Preparing a reconciliation is a crucial tool for checking your bookkeeping. It's the answer key to ensuring your books are done correctly. Now, please be mindful that this is an intentional process. Your bookkeeping program does not do this well by itself, despite what advertisements claim. Clients who don't prepare a reconciliation or leave the software to run amok are stunned at the mess created by the end of the year. Duplicate entries, incorrect sorting expenses, and overstated sales mean extra taxes and a much higher risk of CRA audits. Improve your bookkeeping and protect the financial security of your business by learning about reconciliations. Mistake number 4, not learning about sales tax. Sales tax like GST, HST, or provincial sales tax arise on purchases or sales your business is undertaking. Many new business owners avoid charging sales tax in error or procrastination. To ensure you're on the right side of your sales tax obligations, be sure to check out our other videos on GST HST. It's a big topic and we don't have time to go through all the details today. But to protect yourself in the meantime, know that GST HST usually kicks in when your total sales or money earned exceeds $30,000 in a 12-month period. Once this occurs, you will need to register with a CRA and begin collecting and remitting GST HST. You need to collect and remit GST HST continually going forward until your business closes or you choose to deregister your annual account with the CRA because your sales dip below $30,000. For more information on GST HST, be sure to check out our other videos. Key takeaways. Bookkeeping is a journey and involves learning new skills and understanding tax rules. Using helpful tax resources can help avoid disastrous tax mistakes. The most common bookkeeping mistakes I see my small business accounting clients make is not processing their bookkeeping monthly, not sorting receipts correctly, not doing reconciliations, and not learning about sales tax. Be mindful of these common mistakes will help improve your bookkeeping, reduce your CRA audit risk, and make your tax returns easier to prepare. I hope this video has helped you avoid the most common bookkeeping mistakes. That is all I have for bookkeeping for today. I will see you in another video. Bye for now.